Morning traders, and this is your Dow Jones day trade setup for today. So looking at the daily, we did get an inverted hammer here on the daily. We've also had an inverted hammer on Friday, which was a red hammer. We've had these through the bottom here, which didn't play out at the moment. Well, that Wednesday and Thursday, but we are now rallying again. Now, the interesting thing here is that the Fed announced some stimulus into the market, happened here, rallied fairly strong and hard, and then immediately the seller stepped in and drove it down again. So, I think that the central banks are really trying hard to prop this market up at the moment, and I do think they're going to get something right. I don't know whether they're going to get a full recovery, but it looks like they may be stabilizing the market. So, if you just look at sort of 4 hour and then move on to the daily, you'll see it's still in a very strong downtrend. Okay, but we did get a wedge break. Okay, and the wedge break we got was here. Let me just make that a bit thicker so you can see it. Okay, so there was our breakout, and that happened last week. No matter which way I draw the line, that is pretty much the wedge. That's a breakout. That in my books is a retest of the wedge breakout. So what we're looking for is a new high. We did get a new high here as well. So there was our previous high. Okay, but at the same time we got a new low. So we sort of gapped down yesterday onto a new low. So I think for me at the moment, this is really looking like I'm not going to say a turn just yet, because I want to see another proper high and then a higher low before we start committing to that. But this is a wedge breakout and a retest. So there is a good possibility of targeting this gap at the moment. I think I do expect us to have some kind of a technical rebound. We started that on Friday. Let's go back to the hour. So we started that on the Friday. You can see here was a pretty strong technical rebound, and then we immediately fell to the downside again. Okay, so I think for me at the moment, it's low time frames, looking at 5-minute charts, 12-minute charts for my trading, and use the hour for the trend lines and get your trends in accordingly. So if we look at the Dow at the moment, although I don't want to trade this until Europe is opened, there may be something coming from Europe, but you can see we do have a bit of a trend change on the hour. So as long as we are moving up at the moment, there's my trend line there. So any retest of that trend line on a lower time frame is going to give me a buying opportunity. You can see there was one, and those buying opportunities at the moment are, that's 300 odd points, so not too bad. Okay, I think for me right now it's low time frames, trade with the trend, use the hour. You can possibly even use the half hour if you really wanted to for your trend. You can see it pretty much working out fairly well, and then trade off a 6, 5, 15 or 12-minute chart, and you'll see structure brewing immediately. And I don't think you must be picking tops and bottoms. Just try trade with the trend. So you had a move to the up here, you had a pullback, you've got deviation here, you've got a lot of buyers coming in, there's an opportunity there of the bigger trend line, there's another opportunity for a bigger trend line, and just take profit off them. Okay, so in other words, what we're looking at here, we're probably looking for some kind of a pullback. Could be a deep pullback, or it could be just to come and test these breakout levels here. Okay, so that's the kind of thing that I'll be doing. The minute this thing turns around and starts creating lower lows on the 5-minute or the 6-minute, then we'll start looking for shorts and small trade positions and tight stops. I think that's the moral of the story at the moment. Okay, so volatility I expect is going to continue like this for some time. But one thing I do want to point out here is the dollar. And if you look at the dollar let's go to the 4-hour, it does look very strongly like we have a flat top triangle forming here. Dollar has been rampant. Okay, this is against the euro, so in other words, down is really strong for the dollar. It means a strong dollar. So this has been rampant while the market has been falling, and over the last couple of trading sessions we have started to stabilize. Okay, oscillators are disagreeing with that theory at the moment, so we'll have to wait and see, but it does look like a bit of a flat flat top triangle, possibly a double bottom, but we're going to need to break above this level for that. So there's just a few warning signs that people are exiting the dollar at the moment, and where they're putting their money in, nobody knows. But that is definitely what looks like at the moment. So unless something drastic comes off to spook the market again, I think we are sort of in a position at the moment where there is some kind of stability starting to form, some kind of structure on the higher time frames. As soon as we see that structure, it's going to give us opportunities to buy, and not really for long-term components, but at least sort of medium-term trend for at least some kind of retracement and attack of the gaps above. Okay, anyway guys, that's it for me today. Hope it helps, and we'll catch you later. Cheers for now.